discuss a question that I got asked recently on whether or not the small and mid cap indexes are good for investment. So I thought that today I could just share a little bit of our approach and how we go about answering and working about our assessment. So I'll just first share the slide. Uh, so first a little bit about us, what we actually do and who we are. So we are SEBI registered research analysts. We are SEBI registered retirement planners. We are dealers. We are authorized person and linked to brokers. And finally, we are a privately owned registered financial services company that offers trading, investing, financial consulting, and wealth and risk management advice to our clients, who are generally individuals and startup businesses. So the question that, like I said, I got asked was, should I invest in the mid and the small cap segment, or should I purchase more real estate instead? So, and the person asking this question is age 53 years, with an above average income. The individual is in the 30% tax slab, and he draws his income sources from salary and rent. The individual plans on setting aside over 2.5 million rupees with an investment time frame of 3 years, and uh, at least theoretically, the individual is willing to risk up to 35% of his investment capital to realize the objective gains. So let's just take the let's just take this case a little forward. The person is asking, should he invest for a period of 3 years uh, in the mid and small cap segment, and the individual is cognizant that there is risk, and he has outlined that he would like to take approximately a third of risk in his capital. So now, to answer that question, what I have actually done here is I have actually selected the US dollar and the Pakistani rupee on the weekly time frame. And what I would like to just simply ask the user who may or may not have any background in technical analysis, and that is this chart moving up or moving down? Uh, so it's fairly simple that this price action is completely moving up. We can see that in 2008, 60 Pakistani rupees equal to a dollar. By 2018, it was 100, and as of now, it is 170. And so we are seeing a great disparity in the purchasing power parity. In other words, the US dollar is strongly trending against the Pakistani rupee. And it doesn't matter what the security is listed here. What is of our critical concern is that when we buy into a security, this is how the chart pattern should sort of look like, or at least have the possibilities of becoming such kind of a chart pattern. For example, if I share another currency pair, so this one is with the US dollar Turkish lira. So we can, I mean, very simply, we can see that after several years of consolidation, this this zone was completely broken in 2011, and we see a very strong uptrend in which the Turkish lira in the last 7 years has lost over 700% of its valuation. Or we could say that the US dollar has appreciated significantly against the Turkish lira in particularly the last 5 to 7 years. So what this basically, what the objective of sharing these charts with unambiguous uptrends is that whenever we are investing, this is what we want to see in our investment portfolio, so that we know that no matter when we see a dip, we basically try to buy. So the price rises up, we come here, we try to buy. Every dip for us becomes an opportunity to buy. And obviously at this moment it's in a double top, but it creates a dip. You make an attempt till finally one of them fails, and we leave that position. So now once we have an understanding that this is what an uptrending chart looks like, so we let's just begin to see the Nifty mid cap index now. So this is what we basically see. We see a broadly a general upward moving bias, but once we come into the slightly shorter time frames, what we are seeing is a situation in which the security from 2018 continuously formed lower tops and lower bottoms with one break in between. And here we basically we had, with relation to this, a double top. So this is a double top with this right here. Right here. And after forming this double top, we are directly taken here to what is known as a lower bottom. Now, we see that a range has failed, and we are again closing in on a multi-year resistance. Which was taken out once, but due to COVID-19 or any factors have you, there was a strong correction, and now we are once again back at this resistance point with a possibility of reaching the previous double top of 18,500 or getting resistance at the current level of 15,000. Both possibilities exist, but sum and substance is that good, bad, maybe it could reverse, maybe it could not reverse, maybe the country has a strong bullish story, but this chart does not look like this chart. And when we are buying into securities, this is what we want to see. We want to see clearly forming higher tops and higher lows, and then we want to buy. This is whenever we are buying based on technical assessment, unless and until there is a strong fundamental view in which an individual puts his foot down and says the market has got it wrong over the years and I am now right. Unless that's the case, and there cannot be a reason to blindly go and invest in the Nifty Mid Cap Index, particularly given that at best what the security is a range, and at worst it could resume a downtrend. So I similarly, just to wrap it up, we'll have a look at the Nifty Small Cap. Right here, and we basically see it performing underperforming the mid cap, and so the Nifty smaller cap is clearly a weaker performer than the mid cap, so our assessment does not change. It is not to say that it means that we should not invest in the Nifty small or mid cap. So um, for example, we could have a stock like this. Now, this stock is not a Nifty 50 stock. This is Muthoot Finance, and it definitely features in Nifty 500, and um, we can clearly see that it has an upward trending chart. Or, for example, I means we can take any stock for that matter. What we basically want is a situation in which, I don't know, yeah, what we want is to clearly see a situation in which higher lows are getting created and the stock has a potential of taking out the previous high. So in other words, both these stocks are not Nifty 50 stocks. They're basically in the what we call as the broader index. So in other words, a blanket investment into Nifty mid cap and small cap implies that someone is saying that they want to blindly invest into a range, which obviously is a no. But within these baskets, there are several securities which are showing individual trends, and one needs to assess and research what is possibly better for them. It and we always prefer. That is to say that when the index is ranging, we would prefer going individual stocks rather than picking up ETFs or mutual funds, which basically represent the index. So I hope this answers queries regarding investments in the midterm. I hope you have a good weekend. Cheers.